I mean, we've got a pro-business administration where I think we will have 3% growth next year and probably the same into 26. So the question is, what do investors do if you actually believe in US exceptionalism, or for that matter, you, as you put, rather brutally, are concerned about other markets, and then hence, how do you actually play your portfolio? So the answer to that, in my opinion, is yes, I do believe in what I call the 10,000 club. S&P,
You're talking about the S&P
500, I think we'll get to 10,000.
And sorry, you've said a lot of things so far.
Yeah.
I'll come back to the 3% in 2025, 2026, because you've just kind of given this big number. I'm kind of...
Yeah, flippantly.
Well, exactly, yeah. Yeah, where is your empirical evidence, and what is the valuation criteria that you have based upon saying the S&P 500 is going to be 10,000?
None whatsoever, but just simply momentum. And I think that at the end of the day, we're in a bull market, Steve. That's what I'm trying to say. I think we're globally in a bull market.
Which is worth a 50% increase from here on the S&P.
We are particularly in a US bull market. It will be very volatile. That is, the path from 3,000 to 6,000 has had few pretty brutal drawdowns, and the path from here going forward will have, I believe, it will be positive, but there will be some pretty brutal drawdowns. And that's what I'm suggesting, is that if one likes that concept but are slightly nervous or worried or have already a lot of huge gains in one's portfolio, that to kind of scale up here requires a lot of strong nerves. And I'm saying, look, let's look at other assets in the US, particularly US private equity, buyout, classic buyout, which has had a pretty tough time. A lot of indigestion, valuations got too high in 21, 22. There was the cost of leverage that went up, and some people were actually questioning the whole model, saying, well, hang on a minute here, was the private equity boom of 25 years or so, was it just basically driven on leverage? And once interest rates went up, then quite frankly, it was a waste of time. I'm saying we've had a couple of years of indigestion. I think the top end of the market, the IPO market, will reopen, is reopening already. We even got one in London, how about that? And therefore, the kind of freeing up...
French are bailing us out,
yeah, the freeing up of distributions, kind of time has healed that market. People have got a little bit more used to the cost of the leverage. In fact, leverage is coming down. And the entry level, that's the crucial thing, the entry level of these assets, portfolio companies that are actually in your private equity fund, is around 12, 13, 14, i.e. well lower than your public listed markets. And if you then go in and think you've got some pretty talented managers who are very incentivized, there you go, and they can do roll-up strategies. There's a kind of general, what I call Pac-Man effect of private equity, where sort of large buys medium and medium buys smalls, and the whole thing kind of conveyor belt restarts. So I think that's a good place to be. We're having an administration that's going to deregulate. It's going to be focusing laser-like on productivity, on growth. So I think private equity, which just for people who haven't adjusted their portfolios are now, quite frankly, underweight because public markets have skewed to the upside. So I'm saying, have a look at traditional US buyout private equity. That's where the value is.